Thank you everyone for joining today for our latest educational webinar. We have a really interesting topic today, and one that I think is extremely important if you are a startup investor or private equity investor in general. Today, we have the great privilege of having Mat Sorensen from Directed IRA here. He's an amazing individual, and I'll let him give you his background, but just a phenomenal person to know, and has done some incredible things in the IRA space and has a really interesting background of how he got here. So we'll be diving in on all things, why it's valuable and why there's a lot of great value in utilizing IRA to invest in alternatives, and what the benefits look like in helping you kind of navigate these new waters. Just a little about me. I am the founder and CEO of Kingscrowd, for those who don't know me. We've been around for almost 7 years now, really focused on providing investment research resources to empower investors to become intelligent investors in private equity, utilizing things like Reg CF and Reg A Plus and providing data investment research in this space. But we love as often as we can to be able to provide you with other resources to help educate you on navigating alternative investing in a more intelligent and thoughtful way. And one of the most powerful things you can do is utilize an IRA when it comes to long-term investments that could be really valuable for your retirement and growing your overall wealth. So with that, I'm going to kick it off. And Mat, thank you so much for joining us here today.
Yeah, thanks. It's my pleasure to be here. Thanks, Chris. Good to see you again.
Yeah, good to see you as well. So Mat, give us a little bit of background about yourself. Again, I think it's a really interesting one, and how you came to found Directed IRA.
Yeah, so I was a tax lawyer, kind of helping clients, business owners, entrepreneurs, real estate investors, and kind of just stumbled into clients wanting to invest in small businesses and real estate using their IRAs. This was like in 2006. I was a new lawyer and I was like, I'd never heard of this. Your IRA can own a non-publicly traded asset. I thought your IRA was only meant for Wall Street. And so, so I kind of just went down this journey of helping figure it out for clients, and fell in love with the concept and realized there's actually an industry out there, small at the time. It's gotten a lot bigger. And I just decided to be an expert at it, quite frankly. I'd probably say 7 or 8 years, I just was helping clients on a daily basis, ended up representing a lot of the bigger companies in the space, and then wrote the #1 book on how your IRA or 401k can own startup, venture fund, PE fund, real estate, crypto, basically anything not publicly traded. I just became the legal expert on that. And so, and then as I was doing that, I started investing and doing that myself with my own retirement account. I was like experimenting in some ways for my clients' sake. And then ended up starting a company in the space, Directed IRA, Directed Trust Company. We started 6 years ago. We're number 381 on the Inc. 5000 at 1,100% growth over the last 3 years. We have $2.2 billion in assets. We'll set up 700, 800 new accounts a month. And these people are coming over here with IRA or 401k dollars, and they're saying, hey, I don't want to buy another mutual fund or more stock. I want to invest in a venture deal, a private equity deal. I want to do something in the alternative space. And so that's what we're doing every day with our clients here at Directed IRA.
So to start from the highest level, can you just give us a little more insights on why there's value in utilizing IRA to invest in alternatives?
Yeah, I mean, there's a couple things that are intriguing about it. One is that's just where all the money is, right? Mm-hmm. There's $40 trillion in U.S. retirement accounts. And so, I mean, that's just where the most money is, period. And a lot of Americans, we have our little slice of that $40 trillion. And so a lot of people, when they look at the stock market, and now's a great time, they just see it as overpriced. And so where can I get a better value and make a better investment? So I think the first thing starts with, a lot of people have money in an IRA or 401k. This could be a couple $100,000, millions, whatever, but they've got some money saved and they feel like they can get a better return doing something else, or they need some diversification instead of being wholly invested in the stock market. So I think that's the #1 compelling reason, is just, I can make a better investment or diversify. The other strategy is there's great tax benefits to it. I mean, if you heard the Peter Thiel story, I mean, this is a big one, right? Peter Thiel was the first outside investor in Facebook. So if you guys remember Facebook, I mean, this was a venture deal. This was a startup, small business, whatever you want to call it. And it was funded from Mark Zuckerberg and then his partner, Eduardo Saverin's family. They were just throwing in some money, getting it started. And then they got some traction and a lot of users, but they were broke. They didn't have any money. They weren't making revenue yet. And they're like, we need to go raise money. And I guess we need to go get some money from a venture capitalist. What did they do? They went to Peter Thiel. They got connected to Peter Thiel, one of the PayPal founders. The guy's done a ton of stuff. But anyways, Peter Thiel was the first outside investor in Facebook. Okay. He invested $500,000 into Facebook. I think he got about a 10 to 20% stake for that. And he did it with his Roth IRA. Okay. Well, that turned out to be one of the best investments of all of our lifetimes. And that Roth IRA is now worth $6 billion. That's in a Roth IRA. He will pay no tax as the money comes out. So there's tax benefits to this, as the retirement account's invested in a private company, there's no taxes, it's making money. And then when you pull it out later at 59.5, it comes out tax-free for Roth accounts specifically. Now you could do it with a traditional IRA or even a health savings account. But the Roth is our most popular account that clients use here. And so the reason being is there's just great tax benefits, but it's the same tax benefit if your Roth IRA bought Apple stock and sold it,
Right.
So, but it can be used for startups, venture, alternative assets.
I mean, the idea of not paying capital gains on $6 billion,
Right.
I think is pretty valuable. It's kind of unbelievable, but no, that's the reality from my perspective. It's like, hey, these are long-term investments anyway. If you're going to be investing in these things for 8 to 12 plus years, make this, your long-term gains, right? Put this as your, hey, this is my retirement. This is the dollars that I want to utilize. I just think it's really, really smart. Now, one of the challenges, everyone's like, awesome. All right, let's do this. That I've run into myself and why I get excited by things like Directed IRA is a lot of IRAs are not really, or IRA companies, I should say, are not really set up to help you make alternative investments.
Yeah.
Help us understand some of the complexities that exist and how you're kind of knocking down those doors to make it accessible.
Yeah, I mean, that's the really common thing is like someone will read my book, it's Self-Directed IRA Handbook is what it's called, or they'll like hear me and they'll be like, well, Matt, this isn't true. I called up Fidelity and I said, hey, I want to invest in this small business or this startup with my IRA. And Fidelity told me I can't do it. Well, that's not because IRAs can't do it. That's because Fidelity IRAs can't do it.
Right.
They're a broker dealer, right? I mean, they're going to sell you publicly traded assets and the stuff that's kind of on their menu. And so if you want to invest in a small business or a startup, you can do that, but you're not going to be able to do it with a Fidelity broker dealer account. So what you'll need to do is transfer the account, either a portion of it or the whole thing, to what's called a self-directed IRA custodian, which is what we are at Directed IRA. And there's 20 other companies that do what we do. There's only one that's the best, and that's us. So you don't need to know the others. But when you come to us, we'll say, all right, what do you want to invest into? Publicly traded asset, private company, real estate, crypto. We don't care. As long as it's allowed under the IRS rules, and that's our expertise, is those rules and what you can and can't invest in. And so, but startups and small businesses, venture funds, that's all stuff that your IRA can invest into. And like someone's doing that every 15 minutes here, in our office, making that type of investment. So, but the traditional kind of Wall Street, if I just, put that label on them, the Morgan Stanley, the Merrill, pretty much where most people have their retirement accounts, they restrict you to kind of the easy stuff where you can just put in a ticker symbol and buy and sell. Now, if you're an ultra high net worth individual, like a 50 million plus relationship, you can access this. And actually, most of those companies will allow you to invest in a non-publicly traded asset if you're in the ultra high net worth category there. But if you're not, you're going to need to move to a self-directed IRA company. But a lot of people come to us and they're investing 20,000, 50,000, 100,000. I mean, some people think, oh, this must just be for millionaires. You mentioned Peter Thiel with the 6 billion Roth IRA. I mean, our average account size is like $130,000. So there's some accounts, but there's some smaller accounts too. We have some people that just put $10,000 into a venture deal, or they put 10 grand into a Reg A or Reg CF. They're doing $5,000 in crypto. I mean, so it's not like you have to be like ultra wealthy. You might have to be a accredited investor for some deals, but this area of non-publicly traded assets can be accessible for everyone.
I love that. And I think that's so important. And you mentioned a few other asset classes, things like real estate, so on and so forth. Obviously, if an issuer, like a real estate deal, a startup kind of says, hey, we're doing this deal and you're investing directly, you can do that. But I know when I was at one of your alt investing summits, there was a lot of real estate providers there who have marketplaces where you could go online and it's really low minimums. Talk to me about kind of integrating and working with some of these digital players, even in crypto. Like, do you need to how are people investing in crypto? Is it through Coinbase and they're utilizing the IRA to fund it? How does that work?
Yeah, so let me hit crypto first, and I'll hit real estate second. So we have a crypto IRA product that's a specific IRA account that can buy and sell crypto. And we partnered with Gemini on that product. So when you have a crypto IRA with us, you open up your IRA, you could put in your annual contribution, or this could be an HSA or traditional IRA, SEP IRA, whatever, solo 401k, or you can roll over money from a current, from your TD Ameritrade account or wherever. You can transfer it over, no penalty, no tax. So now it's in an IRA with us. Well, we link you to Gemini where you have a wallet and you'll be on exchange at Gemini. So we partnered with Gemini on our product because one, they were the first company to really get a trust company license. They were audited by Deloitte. They're regulated by the New York Banking Department. I mean, this was for us as like a financial institution of people's retirement account dollars. I mean, people spend, decades building up money in their retirement account. I was like, I'm not going to just let you use FTX, which, by the way, we had 3 finalists for our crypto IRA product. Gemini, the boring company, I'll have to admit that my team did not want. FTX, the hot, cool company that Tom Brady was pitching all day long. And Voyager. Well, Voyager went bankrupt. Canadian publicly traded, but went bankrupt. FTX, we all know the story there. But those companies just weren't regulated properly. FTX had a money transmitter license. The Payday Loan Store has that freaking license. And so we went with kind of the audited big company that was regulated. That's why we chose Gemini. Anyways, long story there. But once you're on Gemini, you can buy whatever you want. So now you can trade all day if you wanted. You can just buy and hold. It could be Bitcoin, Solana, whatever's on Gemini. They have 100+ tokens. And so that's how our crypto IRA product. Now for real estate, I mean, the most popular thing people do in real estate is they're buying their own deal. They're doing a single family home. They're private lending to some other real estate investor from their real estate investment group or a friend of theirs. There's a lot of that out there. But then we do have a ton of what I would call real estate syndicators, and some are kind of platform based. Some are kind of, it's just their own deals. One that was at the event that, was Neighborhood Ventures. They have a private REIT. And they also do crowdfunding too under just Arizona crowdfunding rules, and they have a Reg A fund. So they have a couple of different options of where people can invest, whether it's 5,000, 500,000, they can come into certain types of deals. And they're doing commercial real estate, mostly multifamily in the Southwest. But everybody has a little different offering and what they're doing. And we don't pitch anybody or anything. We're just like, hey, we want you to have access to what you want to invest into. I don't care what you invest into. And frankly, some of our biggest accounts, they're all investing in different stuff. It's not like everybody's doing one thing that makes their account grow significant. So we just want to provide access to what our clients know and what they're interested in and want to invest into.
I had an investor wanted to invest in Kingscrowd, and he wanted to do it out of his IRA. And it ended up being so onerous, the paperwork, the back and forth, him not hearing from, the client managers at his IRA, that he eventually gave up and he just invested out of his regular account because he couldn't deal with it. I've heard a lot of stories like that over the years around the paperwork and not hearing from them. And I think basically these people don't want to facilitate it, right? Because it's just too much effort or they're not set up to do it. What does the process look like at Directed IRA? How do you help people navigate this in a way that makes sense?
Yeah, I mean, that client's frustration is the whole reason I started our company, because I'm like the #1 attorney in this space. Okay. I wrote the #1 book. Most companies in the industry use my book to train their employees. The National Association in the industry uses it for their certified training program. It's the only required book as part of their training program. I used to teach it actually. And so like every day I get someone that emails me, is like, and this is before I had a company. Hey, Matt, what company should I use? I read your book, or I saw you online, or I saw you speak somewhere. I want to go do this. And I would refer to most of my competitors now. And I hated it. They sucked. I was answering all my clients' questions about what form they should fill out. And hey, I got stuck here. How do I fill this out? I'm like, that's not my job. You want to pay me $1,000 an hour as your lawyer to answer those questions? You don't want to. Call your IRA company. And so I was like super frustrated that I couldn't send my people that I was trying to teach this amazing concept to actually act on it. They're with these crappy companies that are my competitors. So that was our opportunity. Right? That was our opportunity because now I was like, all right, I'm going to start my own damn company and I can
Yeah.
send people to my own company and we're going to do it right. We're going to hire the best people in the space, which I ended up knowing a lot of people that's on our leadership team now. We're going to hire great people, train them well, and just do this the old fashioned way, which is like have great customer service, help people out. And instead of throwing roadblocks in their way of like, this wasn't done right, or you need to do this. And by the way, you have 3 more forms you got to fill out. So we broke it down to 3 steps. Okay. It's not complicated. We're going to open your account, which you can do online in like 5 minutes. Okay. You're going to e-sign it, easy. Open up your account. The second thing you have to do is fund the account, which could be a new contribution, or it could be a transfer from your IRA at TD Ameritrade, your old employer 401k from 2 jobs ago. You can roll that over to the IRA. So we got to fund the account with dollars, which usually comes in cash because you're going to go make an investment. And then step 3 is you authorize the investment. So let's say it's a venture fund, let's say. Well, we're going to have a direction of investment authorization form that says, hey, Directed IRA, this is Mat Sorensen. I want to invest $50,000 into Kingscrowd Venture Fund. And here's the subscription document that shows my IRA as the subscriber, not me personally. And it's going to say the amount, of course, and then here's the wiring instructions. I mean, it's not that complicated. Yes,
Yeah.
there's paperwork, but if the company, on the other hand, is helpful and knows how to walk you through the process, and we understand that most people coming to do this, this is their first time doing it. We don't expect you to know how to do it. We are going to help you through the process. And so honestly, I mean, we have some good technology and stuff, but like that's all we're doing differently, which has separated us from our competitors. I mean, we're the fastest growing in the space, highest rated for customer service, really just by helping the customer so that we don't have that issue that you had, which was really the impetus of the business of, I was excited about this opportunity to invest my IRA in a non-publicly traded asset, but the process was such a pain. I gave up on it and I never did it. I mean, that was our opportunity and what we're trying to just be different about.
I've had a few clients from Directed IRA over the past 6 months invest in Kingscrowd Capital. And I see the threads when these things get started, right? Someone starts making investment and they
Yeah.
were always done within like 24 hours. And like I've seen many people do it through trusts and IRAs, and it could take weeks. It could take months. I mean, sometimes like they'd be awaiting a wire for like 14 weeks. So the fact that these things are happening and, the wires are sent within a day or two, the paperwork is signed, like everything, that means a lot. It means a lot, especially when you're dealing, there are issuers who are under time constraints to close around, right? And they're not going to wait around for you to deal with your IRA and like, figure out the paperwork. Like they're just not.
Yeah.
So again, I harp on this because it's so important to me. And I've seen the negatives as both the founder trying to raise money where you have people like, well, do you accept IRA? Yeah. And then it's this terrible process and they fall out of the funnel, or being on the other side, wanting to make these investments and being challenged with the IRA that I had.
Yeah.
What does the fee structure look like a little bit? Because all IRAs are a little different. Some people charge, a percent basis. Some people charge just a flat fee. What does yours look like?
Yeah. Some companies do the like kind of asset under management or administration type fee. That's a percentage basis point model. We don't like that. We just have a flat fee. So our annual fee is $395 that you pay us $395 a year for your account. And then it's $50 when you're buying or selling something. So, you have a $50 account establishment fee first. So your first year, let's say you come to us, your fee would be $495 because you have a $50 new account fee, $395 annual fee, and then $50 to make your first investment. And so, but then every year recurring, it's not, if you're not buying or selling, you're like, a lot of clients will just do like they're invested in a venture fund, let's say, or a
Right.
PE fund or something like that. There's not activity. It's not like they're buying and selling all the time. So they're just sitting in this for a 5-7 year hold period, let's say. So their annual account fee will be $395. I would say that the industry on average is around that $400 to $800 annual fee price point. There's a couple of non-licensed kind of middleman people called like TPAs that might be in the $300 range, but I would be careful using those. They're not audited or regulated. There was 2 of them that have gone under in the last 10 years and people lost money. And it's not a big industry. So 2 out of, that's maybe 20, so
Yeah.
So be careful with those. But so just use a company that's like a trust company or a bank. Those are the two players in it. If you see trust company in the name, that means they're audited and regulated by a banking department. Or obviously there are some banks in our space that kind of have a little department that plays in this area.
Another nuance that I've learned in having run Kingscrowd and raising capital from investors, um, is kind of like, legacy wealth, building this not just for yourself, but you're thinking about your kids coming down the road, right, and inheriting that money. And obviously, we're seeing a huge transfer of wealth, going on probably for the next 20 years, right? It's going to be one of the largest transfers of wealth.
Yeah.
Are there things that people should be thinking about when they're making these investments, if they're thinking beyond just themselves and they're thinking to, inheritance for their kids and whatnot?
Yeah, I think a lot of smart people, and when you get down to really managing your wealth, is we love clients to get into the Roth party. I mean, I just love the Roth account that it's tax free, whether you want to pull the money out in your 60s, 70s, whenever, later on in life, coming out tax free, or you want to leave that asset to your kids. So I mean, what's the number one asset you could inherit, or like the number one thing you could inherit, period? I think it's a Roth IRA. Like, would I want to inherit my parents' brokerage account, their home that they lived in, or some real estate, their traditional IRA, or their Roth IRA? Like, what would I want to inherit? I want to inherit their Roth IRA. Okay? If I inherit their traditional account over $1 million, that's really only worth $650,000. Because when I pull money out of that, I pay taxes. Comes into my income. I inherited that account. If I got real estate, well, I mean, I get a step up in basis, so I can sell it, and it's tax neutral, so it's not costing me, so that's okay. A brokerage account would be the same, I get a step up in basis, so I can sell all those assets. It's tax neutral. But the Roth IRA is the one thing I get to keep for another 10 years, keep investing it and growing it, and have no tax on all the gains and growth. And so the Roth account, for this is again a little more sophisticated for some people, is like if you can choose and you are trying to build wealth in different buckets, we just still love the Roth IRA. And because the people who inherited it have a lot more they can do with it. And that includes a spouse. So you can do, if you pass away, the surviving spouse can just do what's called a spousal rollover. And
Mm.
they take the Roth IRA and it's under their lifetime. And then they pass, it can then go down to the kids. And it could be split into 3 accounts if you have 3 kids, and they could have 3 inherited Roth IRAs. So, so I don't know. I think with this transfer of wealth happening, the Roth account's big. There's another strategy, and I don't want to go too much in the weeds. This is a little more high net worth, but like, let's say you have an estate tax issue. We have a lot of clients with big retirement accounts, and they're in the 13 million plus where they can have an estate tax issue, which depending on how tax policy goes next year, this could go down actually, but that's where it is right now. Well, let's say I got a $2 million traditional 401k, or between me and a working spouse, we have $2 million in traditional 401ks. Well, why don't you convert that to Roth, pay the tax now, and lower your taxable estate rather than having your kids inherit a $2 million traditional IRA or 401k that gets estate tax on it. And then when they take distributions on it, they pay tax again as they take it into income. So there's kind of some little quirks and planning strategies there that can be helpful.
Yeah.
But I don't know. There's a lot to it, but I think that the primary focus of it is invest in what you know and what you care and believe in. I mean, that's really at the core of what we're doing every day and self-directing. And that's different for everybody, right? You might be someone that's into venture and spend your time learning about it and you're looking at it. And it's like, you're probably going to do better at that than investing in crypto. But if you're a crypto nerd and you're all into that and you're making connections and you're following stuff, you might do better there. If you're a real estate guy and you've worked in the real estate industry for 10 or 20 years, maybe you have an advantage and you could invest your money there. So everybody's a little different, but that's the nice thing about a self-directed IRA is everybody can do what they think is best. They can kind of bet on themselves and invest in what they know and believe in.
I love that. I couldn't agree more. And by the way, for folks who are on who want to ask questions, feel free to drop them into Q&A or the kind of comment section, and we'll make sure to try to get to as many of them as possible by the end. What are some, just going to a higher level, taking a step back from kind of just the IRA world, in terms of alternative investing? What are some of the kind of key trends and things that you're seeing from kind of an investment perspective that you think are interesting?
Probably the biggest thing we're seeing is people raising capital, whether this is venture, kind of like growth equity, buyout, private equity, is we're seeing those funds coming down to the quote unquote mass affluent more and more. So rather than going to the high net worth family office to go raise capital, they're saying, you know, why don't we go collect a bunch of $50,000, $100,000 checks from the mass affluent, the people making a couple $100,000 a year. Maybe they've got 500,000, a million or 2 million in net worth. They're not ultra high net worth. They don't have a freaking family office, but they've got some investable capital and they have an interest in alternative assets. And so that's been a big shift, I think, in the last few years that seems to be accelerating, which is great for us because what's the number one asset a lot of the mass affluent have? Retirement accounts. And they want to invest those retirement accounts in these more illiquid investments because when they look at their investable dollars, a lot of people say, well, I've got 300,000 in the bank account over here and I got $300,000 in my IRA and I want to make a $50,000, $100,000 investment in a private fund that might be locked up for 5 to 7 years. Well, I've always thought of my IRA or 401k being long-term money. I don't want to touch it for 5 or 7 years. I'm trying to grow it for the long haul. This is my long-term money. And so it's the psychology helps them too. It's like, that's a great way to access it if they know that's possible.
Mm-hmm.
We spend a lot of time just educating people raising capital that, are you bringing this up in your conversations? If your target audience is the mass affluent, like you're not going to endowments and a family that has generational money, it's not IRAs, it's just their parents made a shit ton of money, pardon my French, and then the kids have it now to spend and they got a family office running it, you know, allocating. I mean, the IRAs aren't there. But once you get to raise it the mass affluent, that's where there's a lot of IRAs or 401ks. And so knowing how to talk to those people and ask the question is what's unlocking a lot of capital. And I think that's a win for the investor. I mean, that's the nice thing is that mass affluent that has money is dying to know this. They had no idea that they could access these types of investments in the first place, let alone use their IRA. So I think there can be a win-win of those two things. And so we're trying to help capital raisers understand this, that are going after the mass affluent. And we're also trying to help people that have their own IRA or 401ks know this is accessible, like to your IRA or 401k or outside of it. I mean, we do our alt asset summit that you spoke at. You did a phenomenal job, by the way. And I don't care whether you're investing in your IRA or 401k, but I want you to know about all these different asset classes.
Are you seeing any issuers, take kind of an intelligent approach to getting in front of IRA users or making it really clear that, guess what, those retirement dollars you have sitting on the sidelines can be invested in my deal, that are kind of like really navigating it in an intelligent way that, maybe a few years ago you wouldn't have seen?
Yeah. So like one of the companies at the Alt Asset Summit, Real Estate One Neighborhood Ventures I mentioned earlier, I mean, they have over 1,000 IRAs invested in their private REIT. And it might be like 30 to 40% of their invested capital is just people's IRAs because they talk about it, you know? And so everyone that hits them that's interested in their deals, and they're doing multifamily real estate, it's a Reg A fund, taxed as a REIT. Everybody in those deals knows, oh, if I do have IRA dollars, I could throw it in. And so I think if it's part of the communication and the team is trained, some people have a department or a team that in the investor relations or, that just does this, it's like, oh, this is an IRA person. They're going to, Nancy, or they're going to John or whatever, that does the IRA investments and knows that. And so I think those are the ones that have a lot of success, is that put a little bit of effort into it and resources rather than being kind of reactive of like, oh no, someone wants to do it with their IRA. We don't know what to do. It's kind of a pain in the butt, which I get if you're using the wrong company. I don't fault that. But I do think that the ones that have success are the ones that really put it front and center and realize that that might be the easiest place to raise money.
Right. Absolutely. Question from the crowd. So do I understand that I could take a Roth IRA and borrow that money as a home equity loan to myself?
No. Okay. So there's something called the prohibited transaction rules. Okay. And this is a rule that says you cannot transact your IRA with yourself. So your IRA, like lending you money, would cause a prohibited transaction. Now, there is something called a participant loan in 401ks where you can take a loan from your 401k half the balance not to exceed 50K. That's a little special court rule for 401ks, but IRAs, you can't just transact it with yourself. So when we're talking about self-directed IRAs, I'm talking about your IRA making an investment for your IRA. So like if my IRA is investing in Facebook and being the first outside investor in the Facebook, which is what it's called back then, it gets shares in the Facebook. If the Facebook distributes profits or I want to sell those shares, the IRA gets the gain. Same thing if I use my IRA to go buy real estate, the IRA owns it. The IRA gets the rental income. When the IRA sells the property, the IRA gets the gain and it goes and it's building up the IRA. So don't think of the self-directed IRA. And a lot of people get confused by that immediately. And they think, because they're just so used to it owning a stock or a mutual fund, they think we're talking about taking the money out of the IRA and then personally investing. That's not what we're talking about. I'm just talking about rather than your IRA owning Apple, your IRA can own a startup like Apple before it went public. You know what I mean? It's just you're not buying on the stock market. You're doing it in a private investment. And so that's what a self-directed IRA is it's owning a non-publicly traded asset, but it's still in the IRA. The IRA still owns it.
Got it. Another question that came through, can I transfer a 401k into a Roth IRA?
You can. So now, typically, if you have a current employer 401k, your current employer is going to lock you down and say, hey, we use Vanguard, or we use Voya, you got to buy the stuff on the menu here. And so typically with your current employer 401k, unless you're over retirement plan age of 59 and a half, but if you're not, you're kind of stuck in whatever investment options they have. You could convert to a Roth 401k, they're likely, but your investment options will be limited. Now, if you have a prior employer 401k, which is a lot of people have prior employer 401ks, people change jobs every 5 to 7 years. It's very common. That prior employer 401k can be rolled over to a traditional IRA and then converted to Roth dollars. So let's say that prior employer 401k is traditional 401k dollars or pre-tax dollars. It could be rolled to a traditional IRA and then we can convert it to Roth dollars the second day. Now you've got a Roth IRA self-directed that you can go invest in a startup, small business, real estate deal, private fund, whatever you wanted to do. And now it's Roth dollars growing and coming out tax-free. Now, when you convert to Roth, let's say it was $100,000 of traditional 401k or traditional IRA dollars that you want to convert to Roth, you have to pay tax. So you have to take that 100,000 into your taxable income. No penalty, but it's $100,000 on your tax return now of income. You pay at whatever tax bracket you fall into. So there's a pound of flesh you got to send the IRS, but you have the upside of growing that account and all the returns coming out later totally tax-free.
Another question that came through, I invested in a startup a year ago, but it was not through a Roth IRA. Is there any way in which I can move my holding to a Roth?
Ooh, I wish there was. That's a good question. Sadly, no. You could buy more shares with your Roth, but you can't buy the shares you personally own. So this gets back to that prohibited transaction rule, which is 4 chapters in my book, by the way, the Self-Directed IRA Handbook. But at the core of that, what it basically, this rule says is, hey, these IRAs are like these tax qualified beneficial accounts. They have all these tax favorable rules where you don't pay tax when you make money. We don't want to let you move or sell assets that you personally own over to your retirement account because we don't trust you with your own account. We think you're going to sell it at a loss personally, pick it up in your IRA, sell it for a gain and pay no tax and get out from under it. And the IRS knew that from the very beginning when they made retirement accounts back in like the 70s, like this rule has been around. So your IRA can buy from and sell from anyone else, but it can't from you or your kids or your parents or your spouse, right? These are all in this restricted list of who your IRA can buy. So yes, your IRA could buy shares in a private company as you have already done, but it can't buy your shares.
Another question came through. This one's interesting. For legacy estate planning, is there any benefit to holding a trust within a Roth IRA? Can you do that?
So what you would do is you would list the you would list the trust as the beneficiary of the IRA so that when you pass away, the IRA gets inherited according to the terms of your trust. Now, there are some unique kind of IRA trusts that people with very large accounts will sometimes do where it's basically a trust just for the IRA. Most people just have their kind of revocable living trust, and that might be that's the beneficiary on their IRA account. And so that's really, and everybody's trust is a little different. You know, are you married or not? Do you have kids or not? What's your strategy? Is there charitable stuff happening or not? I mean, everybody's a little unique. So, but that, if you do have a trust, it should generally be the beneficiary on the IRA. But during your lifetime, you're still the grantor, owner, beneficiary of the IRA during your life. But you have a beneficiary designation that says, when I pass, when I die, here's who gets the IRA account and inherits it. And that's where you could list your trust.
Got it. I like this one a lot. And I've actually been curious about this myself. If I'm a founder of a startup, can I hold my equity or the equity that I receive as a founder in my Roth IRA?
Ooh, this is a tricky one. Let me first say you need a consult with a very competent, experienced lawyer. Okay, I can direct you to some if needed. The general answer is no. But there are some ways it can work. So this is where, you know, and if I was a lawyer and you called me up with this, I would say, plan on 6 hours of billable time for me to give you a clear answer on that. But let me give you the guardrails. Peter Thiel's, again, let me just go back to him because he's been in the media on this, you know, back when like Trump and Warren Buffett's tax returns all got like leaked and everything, his did too. And the whole story about him was this 6 billion Roth IRA, which one of the deals was the first outside investor in Facebook. Well, the first deal he did was PayPal. He invested his Roth IRA in early shares in PayPal, in kind of basically the founder shares. Well, the thing in PayPal was there's like 6 co-founders, right? There's like Elon Musk, Peter Thiel. I mean, it was like, you know, it was like who's of Silicon Valley that was part of that. At the time they weren't, but now they all are. But so he was a minority owner. He wasn't over 50%. That helped. Okay. So if you have 3 co-founders or more and you're like, I'm only a third, now we're in the game. If you're like the sole founder doing the thing, it's not going to work. Okay. So there's a kind of this 50% rule where you're going to need to be below 50% to get in the game and use your retirement account. The second issue you're going to have is your personal compensation, which, because there's something called self-dealing you have to overcome. What a lot of people do where they're doing this strategy is they make sure that the board has the ability to set compensation for you as one of the founders without your influence, because you don't own it now. Your Roth IRA actually owns your shares. And then the third thing, which is the trickiest, is you have to pay fair value at the time. And this is the thing where where all the news on Peter Thiel on this was rough, because people were like, well, that wasn't fair. He valued it at like thousands of dollars, and then it ended up being worth hundreds of millions. Well, yeah, because it was one of these moonshots that hit. But how did we, like, honestly, that company maybe had a 5% chance of success, you know? And so, but it just happened to hit, right? It had the right team and the right idea, the right time. There's a lot of things that why it hit. And so, so the valuation could get scrutinized by the IRS. And the IRS has something called Roth stuffing. This is they call it, where they don't want people to stuff what's otherwise a personal investment into their Roth IRA.
Mm.
Think of your Roth IRA. Your Roth IRA can only make investments. Okay. So like I've had people send in a deal where they're a co-founder of multiple, they're below 50%. And they're like, all right, my Roth IRA is paying $500 for these shares. And I'm like, tell me why the company needs $500 and why it's willing to give up 20%. Well, that's because I'm working and I'm one of the co-founders and we're going to do all the work and take a minimal salary or no salary. Well, that's not an investment then for your Roth IRA. That sounds like you doing work and trying to put the ownership in your Roth. So you have to be able to separate those two different concepts. So anyways, there's a long conversation there, but that would be kind of the things you'd have to work through to get comfortable to then do the transaction. But it's possible if you're below 50%.
Got it. 2 more questions in here. Is there any special paperwork required when investing in a startup or real estate that I wouldn't otherwise need if I was investing out of a traditional bank account?
Is there any additional paperwork or things you need? I mean,
Any special documentation or like
The only thing you're going to need is the self-directed IRA. I mean, that's the gateway here. So now when you get to the documents, like the subscription agreement, this is where you have to do it properly. So like if this is me investing in, let's say, Kingscrowd venture fund, I'm not going to write the subscriber as Mat Sorensen. It's going to be the subscriber purchaser is going to be Directed Trust Company, FBO, Mat Sorensen, Roth IRA. Like that's the investor.
Yep.
And then you put the tax ID of our tax ID, which we give you. It's not your social security number. And so you'll go through the documents and it's in the name of your IRA. It's not in your name. And then when you're wiring the money, like we'll have your money here. So you're going to authorize us to say, hey, invest 50K from my Roth IRA that's now with you guys. And then we'll send the 50,000 to purchase, subscribe to the shares. So it's still like the same paperwork. It's just, you're going to need the self-directed IRA because the brokerage IRAs aren't going to let you do this. So you need the self-directed IRA, and then you need to do the paperwork properly. But our team helps you with that if you have questions. I mean, they're all very standard. The key mistake is people will put their name on it, and then they'll say, hey, go fund this. I want my IRA on it. It's like, you put it in your name. You're not owning this. You're going to get K1s to your social. You don't want that, or 1099 divs. We want this going to your IRA. It's not going to hit your 1040. So that's probably the number one thing to be careful about. It's just doing the docs right.
Excellent. All right, one more question here, and then we'll wrap it up. Are there changes in the pipeline at the IRS level that could close the door in converting a traditional for a Roth?
Well, there would have been if we had a different outcome on the election. So there's a number of things that were proposed by Biden and Harris that's been on kind of the Democrats' agenda, which is restricting Roth conversions for high income earners, or restricting a strategy called the backdoor Roth IRA, which is a way that, see, if you're high income, you make over like 160 single, 210K married, you can't make a Roth IRA contribution every year. You can't just throw $7,000 in a Roth IRA because you're high income. But what you can do is put $7,000 in a traditional IRA and convert it to Roth. It's just called the backdoor Roth IRA. We every day here at Directed IRA. It's what I do to fund my Roth, just get new money in every year. So they've talked about closing that out. But that, again, there's an election that the Republicans and Trump aren't going to do that. The other one was there was going to be a restriction on any type of Roth conversion if you made over $400,000 a year. Because the way some people in Washington think is that high income people should not have the ability to have a Roth IRA and make money tax-free. They think the Roth IRA is more of a working class strategy. That was the concept of it when it came out. And they feel like this is just a political, philosophical thing, that the Roth has been co-opted by wealthy people to make money tax-free. And so they want to shut that out of being able to convert and say you couldn't do a Roth conversion if you make $400K a year. But given the makeup of Congress right now, I see zero. In fact, it might even go the other way somehow. I see zero interest in that.
Got it. All right. Well, last question here. For those who are interested, they've listened to what you have to say and are thinking, the Roth strategy could be good for them, or they have an IRA elsewhere and it's just not easy to be able to make these types of alternative investments. Where can investors go and what can they do to get started?
Yeah. So, I mean, we're really experts at just self-directing. So, you can book an appointment at directedira.com. I think we even have a special link for you guys as a discount, directedira.com/Kingscrowd. You can go there, maybe share it in the chat if you can. But you can book a call with our team. We have some of our experienced team on that link, actually. Mark Peck, he's awesome. And so, but realize we're not the person to tell you what to invest into. Like maybe use Kingscrowd to make that analysis and look at those things. But for us, we're just like, if you know what you want to invest in, whether it's a private fund, and I don't care the variety of it. It's a real estate deal, it's crypto, it's small business down the street, it's whatever. That's where we can help get the account going and make the investment transactionally happen with your retirement account dollars. Get your money moved over from, your brokerage IRA or wherever it's at, your old employer 401k. But you got to come to us with what you want to invest in. And our team's not going to be like, you should invest in this or that. We're going to be like, well, what do you want? That's not our expertise. We're the ones about making it happen once you know.
Awesome. Well, Matt, thank you so much for your time. Thanks for your insights. This has been incredibly valuable. I've definitely learned a lot here today. Hopefully you all have as well. We have that link, directedira.com/Kingscrowd in the chat. We'll also be following up with the recording and the link to that as well, so you could go check them out. Highly recommend that you do. And yeah, this has been a wonderful conversation. Thank you everyone for joining, and have a wonderful day.